From the morning reading, option traders doubled down on bullish strategies last week despite a negative week in the S&P 500. That's a rare bet by traders that tend to be trend followers and has resulted in generally weak returns going forward. The S&P's drop of more than 0.9% on Friday, followed by Monday's gain of at least that amount when coming within 1% of a 52-week high, has occurred 44 times since 1928. The S&P returns going forward were below average across all time frames. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7 o'clock a.m. Central Time, and I'm recording this in preparation for the market day of April the 21st, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and just see what has come into play with our overnight action. In general, across all four of the broad market indices, we are up nicely, up about 1/3% across all four of the indices. Crude oil down about the same percent, about 0.3. You have the euro down about 0.5%, bonds up about 1/3%. So again, that supposedly correlation of bonds going down and indices going up, doesn't seem to be terribly true of late. It seems like bonds and the indices all go in the same direction, and they're even going in the same direction to the same degree at this point. Gold also up about 0.3%. So there you go with that. Now China up 1.81%. Hong Kong up 2.79%, Japan up 1.4%, so Asia doing very well. And Europe, the DAX in Germany is up about the same as our own markets, about 1/3%. United Kingdom down about 0.3%. So in general, pretty positive action last night with just a couple exceptions. In terms of our macroeconomic reports for today, in United States, there is nothing of any significance on our schedule. For tomorrow, we do have the usual Wednesday reports, existing home sales, you have crude oil inventories during the market, of course, and that's it. And we've got a very light week, really all week. It really heats up next week. In terms of our current volatility conditions, obviously yesterday we had a follow-through bounce day off of Friday's down, so we had large standard deviation plus moves, even 2 standard deviation moves on Friday, followed by standard deviation moves going the other way. And again, we're still within the range, still within the compression, but have not violated either side. We see some of this volatility coming back and forth within this range, but nothing that actually moves the nickel to move the market into a new level. Right now, short-term VIX 12.62, historical IV percentiles, as you see, very low across all areas. There's really very, very, very little fear and very little real action going on here as of yet. So let's take a look and see just what our hedge levels are with this action. Not a lot of changes from yesterday. Some we're still intermediate term, phase opinion phase 3. IBD status remains uptrend under pressure. It's been there for quite some time. GMI index did tick up 1 level to a 5 out of 6 with yesterday's bullish action. And this is a change. The active trader market posture did flip back to bullish. This is kind of flipping back and forth, so you've got to take that with a little bit of a grain of salt, but it is bullish. And even the prior day, it was only weakly bearish because the levels were relatively high, but it is back to the bull side. Position sizing opinions, no changes here, up to 50% based on investor. Active trader based on volatility is up to 100%. Market timing, a little bit of a change here. 1 day outlook after yesterday's bullish action only remains slightly bullish at this point. 3 day outlook bullish, and then 2 week remains slightly bearish. Market posture, as I mentioned a moment ago, is now bullish, and indeed you see all 4 indices are bullish, are in the upper zone, I should say upper middle zone, and the Russell is actually in the upper zone, up above 80 and very bullish, so it seems to be holding up the strongest. In terms of hedge levels, we continue to have an opinion of a level 1, so this is reflective of the fact that we have a number of significant warning signs that this market is not the most healthy bull you could find for sure. From volatility, we still have this daily squeeze, and it's in its 14th day, so this is starting to get to be a fairly prolonged squeeze on the VIX. From distribution day count, we have NASDAQ and the S&P still at very high levels. Looks like the number's missing there, but the NASDAQ, I believe, is a 6, with the S&P at a 5. In terms of new highs, new lows yesterday, pretty moderate. So certainly it wasn't a bulls in total control and companies coming in with lots and lots of new highs. Neither one of these numbers was terribly exciting. Other warnings, obviously we still had that S&P crash warning that had fired some time ago. And then on our intermarket risk aversion indicators, all 5 are now flagging risk off conditions. So that certainly is a serious warning for our hedge risk level. Option income strategy, still the same. VIX inside the acceptable window, but in that daily squeeze. Consider reduced position size and account for the potential for increasing volatility as you design your option income strategies. Covered calls, also relatively conservative, neutral, calling for a 2-to-1 distribution between in the money and out of the money strikes. And then put selling, certainly Friday took advantage of the opportunity with that weakness to sell a number of puts across companies in my core portfolio basket of stocks that I was willing to own in the position size that I was willing to own. Caution should be exercised in new position until we get some sort of resolution to this coiling pattern. In terms of sector-specific market postures, obviously yesterday brought in a great deal more healing. Remember, these lines are relatively horizontal, so they tend to flip and make this thing look a lot prettier than they perhaps really should be. And then the same thing when we get a like Friday kind of action and it flips down below, it makes everything red in a nanosecond. So much like any moving average type indicator, when you are in a compression or ranging action and those moving average lines are flat, they are not terribly meaningful. So we do look for tendencies, and certainly retail is considerably weaker than they were in much of the first quarter. That certainly is something that it gets flagged here. Consumer staples also seems to be diminishing in its strength. It's usually been also a hero in much of the first quarter. From a percent change, obviously everybody was green yesterday. Information technology at the top, utilities also at the top. Utilities, be careful. Look at that chart very, very carefully if you're looking at positions in utilities. Given the larger fundamental picture, this is likely a bit of a bounce and will not likely be a hero sector in 2015. So I'd be pretty suspicious of that as more of a counter trend move than it is of a very big bull move in utilities that will persist. Staples, you see, was relatively low. Energy, relatively low. We've been watching that one quite a bit lately as well. So I think that's enough on that. In terms of industry-specific groups from our friends at Shadow Trader, retail, internet, healthcare, railroads, and biotech are and remain in the top 5. That should take care of it for today. As always, greatly appreciate your sharing what you found here with your trading friends, and of course like us on YouTube and our other social media platforms. More information available at the website, as well as you can always send us emails at support@falconglobaltraders.com. Disclaimers: please hit the pause button if you need more time to review this, and we'll see you back here tomorrow morning. And we certainly greatly appreciate your input into the Falcon Global Trading community.